Hey guys and girls, welcome to this week's episode of the No BS with Birchy podcast. I'm your host, Nathan Birch, and this is the show unraveling the truth to the facade of the 21st century. We're now exiting the matrix and waking up to motherfucking reality. Today is going to be a bit of a wild one, folks. I'm going to be talking about Ponzi schemes, right? What is a Ponzi scheme? Where does it come from? And what really is a Ponzi scheme? So Ponzi schemes, property bubbles, lots of terms that are thrown around out there. You'll watch the news every day and you'll be told in the morning that there's going to be a property boom, and then by the night time there's going to be a property bust, and then the next day you're going to hear it all over again and you're going to be confused about stuff that you hear. The word out there, Ponzi scheme, I've actually got the article in the definition from, I think it's from Investopedia. So we're going to read it directly from Investopedia, talk about what a Ponzi scheme is, and then go through history and timeline about, other potential Ponzi scheme and look at for the risks that surround us in the world that we live here in 2024. I was going to say 2021. I don't know why I was going to say that, but 2024 and beyond, because how big's the Ponzi scheme we're living in today? So let's get into it. This one here, just maybe the team will throw a link, like a little picture of this for those that are watching it from a video, so you can see what I'm reading it from. Ponzi scheme definition, examples, and origins. What is a Ponzi scheme? A Ponzi scheme is an investment scam that pays early investors with money taken from later investors to create an illusion of big profits. A Ponzi scheme promises a high rate of return with little risk to the investor. It relies on word of mouth as new investors hear about the big returns earned by early investors. Inevitably, the scheme collapses when the flow of money begins to slow, making it impossible to keep up with the payments of alleged profits, right? So if we think about it, right, there's been lots of, we'll go through a few examples of some Ponzi schemes here. When we look at the flow of funds, right, as I'm reading out that what is a Ponzi scheme, I'm thinking of the whole monetary system that we have right now, right? And are we in a property? You always laugh when people say, oh, we're in a property bubble. We're not in a property bubble. We're in a debt-based Fiat Ponzi scheme, right? A debt-based fiat currency. Our currency is a Ponzi scheme. Our currency, i.e. money, we're referred to it as money, right? People think that money is real and we own it and all that sort of stuff. It's not. I'm going to get into that a little bit later about how money is fake and money is only debt. It's a figure of your imagination. It's a belief system. It's a Ponzi scheme, right? So if the money is a Ponzi scheme, then everything that is traded in that currency system is a Ponzi scheme as well. So is any of this real? Is a question you need to be asking yourself, and we'll get into that shortly. So it goes here. The early participants recruit more participants, but collapses when the supply of potential participants dwindles. Key takeaway: a Ponzi scheme relies on an ongoing stream of new investors to create an illusion of a profit. Some of the new money is used to pay the early investors, making the scam look legitimate and highly profitable. Most of the money is pocketed by the scam's operator. Scam collapses when the new supply of new investors slows and the supposed profits evaporate. Ponzi scheme, a fraudulent scheme that involves paying existing investors with non-existent enterprise with funds collected from a few investors, right? And if we look at, the system of it all, right, we talk about money. Who creates money? Everyone thinks your government creates money, right? You go, the Australian government, the US government, the UK government, whoever is creating this currency. But they don't. They take it out as debt, right? And let's assume that let's say we bought the first $1 ever created, right? $1, let's say the first $100, just to make it nice and even, right? The first $100 ever created, and let's say it had a 5% interest on it, right? So I've created the $100, here's the $100, give it to you. Out of that $100, you got to pay 5% interest this year, right? So you pay me the whole $100 back at the end of the year, then where does the $5 come from for the 5% interest? You have to borrow the interest, right? And that is a scam within itself. So I'm going to get to that a little bit later. But let's stick to this Investopedia article, Understanding Ponzi Schemes. A Ponzi scheme is a type of investment fraud which investors are promised big profits at little or no risk profits being distributed to early investors. When the flow of new investment slows a scam, artist doesn't have enough money to pay out those supposed profits. That's when the Ponzi scheme collapses. Origins of Ponzi scheme. The Ponzi scheme gets its name from swindler Charles Ponzi, who in 1920 became a millionaire by promoting non-existing investment opportunity. Ponzi wasn't the first to participate in this type of fraud. Earlier schemes were reported in the 19th century, and Charles Dickens dramatised the methods in two novels, The Life and Adventure of Martin Chuzzlewit in 1844 and Little Dorrit in 1857. Charles Ponzi's original scheme convinced 1919 focused on the US Postal Service and the international mail. He received correspondence from someone in Spain who had prepaid international postage. This international postage reply coupon could be exchanged in the US for postage to send a reply back to Spain. This gave Ponzi an idea. There were tiny differences between the charges for the coupons and their redemption prices based on differences in currency exchange rates. Scaled up, this could return a profit. This concept was a form of arbitrage, which is not illegal. However, Ponzi was hardly engaging in this practice. It would be eventually discovered that he only had $61 worth of these postage coupons. He was collecting money from investors and paying out just enough to keep the scheme going. It lasted until 1920 when the Boston Post began investigating Ponzi's security exchange company and his promise of a 50% return in 90 days, and later just in 45 days. Ponzi was arrested by the federal authorities in August 12, 1920 and charged with several counts of mail fraud. He served time in prison. After his release, he tried and convicted on state charges in Massachusetts. He went on to spend time running from the law and being arrested in other states before being imprisoned in Massachusetts to serve his sentence. Following his release from state prison, Ponzi was deported to his native Italy. Bernie Madoff, and the biggest Ponzi scheme in history ever, right? So I don't believe that this is, and I'm going to explain why I think so in a moment. Bernie Madoff, so in the GFC, there was a guy called Bernie Madoff, which became unstuck because his Ponzi scheme broke in the credit crisis, right? Charles Ponzi didn't run the last Ponzi scheme. In 2008, Bernard Madoff was convicted of running a Ponzi scheme that falsified trading reports to show his clients they were earning profits on investments that never existed. Madoff promoted these Ponzi schemes as an investment strategy called the split strike conversion and traded blue chip stocks and options. Madoff simply used historical trading data to create false records and profits from trading activity that never occurred. During the 2008 global financial crisis, investors began to withdraw funds from Madoff's firm, exposing the company's illiquid nature. Madoff eventually admitted that his firm had $50 billion of liability owed to 4,800 clients. However, the government determined the real size of his fraud to be $64.8 billion, sentenced to 150 years in prison and forfeit $170 billion in assets. Madoff died in prison in April 14, 2021. Just a little bit of history. It makes me think, right, about our currency that we use, so our dollars, right? So in 1913, the US Federal Reserve was enacted, and I'm going to talk about America here because everything's now based off the US dollar, right? So without going too far off and without going into geopolitical and talking about other countries and other states and why wars have started and all that, but if there's a war, right, you got to ask who funds those wars, right? There's two sides of a war. We've got, Russia and Ukraine here. We've got, Afghanistan and then US. We've got, China and, when you look at a war, who's funding the other side of that war, right? And there's many wars going on and there will be many in the future. So in 1913, the US Federal Reserve was enacted. Who created that? We believe that it's federal. It's not federal. Do some research into it. It was created by some elite bankers. And these bankers enacted their rulings into the government, right? And basically from 1913, this game of where we are today with the dollar system started out. After the two wars, in 1933, after the Great Depression, it was illegal to hold gold. So gold was like $20, and then everyone had to turn their gold in. So gold before 1933 had a value of $20 for an ounce of gold. And then silver was about $1 per ounce of silver. After 1933, it was illegal to hold it. Some people could hold it, which were mainly governments, i.e. the central banks that controlled the governments, right? So the Gold Confiscation Act of 1933, until 1971, it was illegal to hold gold. But the day after they made it illegal to hold gold, it was instantly revalued from $20 to $35, which it was pegged to for a period of about 40 years. And in 1971, they removed the Bretton Woods system and put in a new system, which is petrodollar, which basically meant that that the gold was no longer traded for US dollars. So US dollars weren't traded in gold anymore. You couldn't redeem them for gold. And from that point, it became a fiat currency, which is a Ponzi scheme, in my view. Looking at that, all countries around the world were forced. There was an agreement put out there by President Nixon to create the Henry Kissinger enacted. I think he just died recently, actually. The world got a little bit better when these people fall off the cliff. When we look at Henry Kissinger, and they put in the petrol dollar, which basically means that every country must use US dollars to trade in oil. And when anyone wants to trade in a different currency than in oil than the US dollar, that's when a war erupts, right? And you look back in the early 2000s, it's been tested many times. Gaddafi, Saddam Hussein, within 6 months they were killed. Going back in 2016, China started trying to trade yuan with oil, and since that, the BRICS nations have banded together to try and trade oil in different sort of currencies. Since that, we've seen a lot of geopolitical issues because the US is losing its position, and that Ponzi scheme starting to fall apart. And I'll get to that with some actual data for those of you that are watching this on a video, and pull apart some charts in a moment and show them with you. And maybe my team can actually put those charts on the screen. I'm going to read them out and show them to you, but those charts they can put on the screen so you can see them. We can go through them in live time. When we look at that, that is a Ponzi scheme to me, because you're third line forced to use something, and we'll get into the charts. The charts are going to be important, but let's look up some Ponzi scheme red flags as per Investopedia. Ponzi scheme red flags, regardless of the technology used in the Ponzi scheme, most share similar characteristics. The Securities and Exchange Commission has identified the following traits to watch for: a guaranteed promise for high returns with little risk, consistent reflow of returns regardless of market conditions, investments are not registered with the SEC, sellers are not licensed to sell investment products, investment strategies that are secret to describe as too complex to explain, failure to provide clients with documentation of their investment, difficulties withdrawing money. When we look at that, right, let's go through the list, right? Guaranteed high promise of return on investment. Well, inflation's eating up your cash at 7 to 10% if you were lucky, right? If you had $100 going back 10 years ago, you could have bought paddle pops at $2 a piece. Now they're like $4. The paddle pop 10 years before that were $1, right? So you could have bought 100 paddle pops, you could have bought 50 paddle pops. Now you can buy maybe 20 to 25 paddle pops. For those of you watching elsewhere, they're like an ice block, right? You buy an ice block, right? So you are losing your wealth via this without even watching. And they say inflation is good, and you see all these commies that go on the TV and they go, inflation data this, inflation data that, right? But they're just saying you're getting robbed at a lesser rate. A consistent flow of returns. Investments that are not registered with the SEC, the money or currency that you use is not registered. Sellers are not licensed to sell investment properties. Investment strategies that are secret or described as too complex to explain, right? I'm going to get the editor to put in here a little video of the old finance minister of the US, right? The president, Biden's right-hand man, explaining how money operates into here. And you tell me if they think it's too hard when they can't even explain how it works themselves. That's your government, right? Enjoy the little link.
The US government can't go bankrupt because we can print our own money.
It obviously begs the question, why exactly are we borrowing in a currency that we print ourselves? I'm waiting for someone to stand up and say, why do we borrow our own currency in the first place?
Like you said, they print the dollar. So why does the government even borrow?
Well, again, some of this stuff gets, some of the language that some of the language and concepts are just confusing. I mean, the government definitely prints money, and it definitely lends that money, which is why the government definitely prints money, and then it lends that money by selling bonds. Is that what they do? they sell bonds. Yeah, they sell bonds, right? Because they sell bonds and people buy the bonds and lend them the money. Yeah. So a lot of times, at least to my ear with MMT, the language and the concepts can be kind of unnecessarily confusing, but there is no question that the government prints money and then it uses that money to, yeah, I guess I can't really talk. I don't get it. I don't know what they're talking about. Like, because it's like the government clearly prints money. It does it all the time, and it clearly borrows. Otherwise, we wouldn't be having this debt and deficit conversation. So I don't think there's anything confusing there.
Failure to provide clients with any documentation of their investment, well, go get your cash out. Go to the bank and ask the bank, and difficult is withdrawing your money, right? Go to the bank and say, hey, I want 10 grand. What do you want the money for? What are you going to do with the money? You're a criminal. You can do this, right? I want to buy hookers and blow, whatever. It's none of your business. I've given you money, give me the money back. I don't touch hookers or blow, right? Just to put it out there and be clarified, right? But whatever you want to do with your money, why is the bank questioning? Why won't they give it to you? Why are they treating you like a criminal, right? Because they're not liquid. They don't have the money, right? It's a Ponzi scheme. What is an example of a Ponzi scheme? Adam promises a 10% return on a $1,000 loan to his friend Barry. Barry gives Adam $1,000 with the expectation that he'll be paid $1,100 in 1 year. Next, Adam promises 10% returns to his friend Christine. Christine gives Adam $2,000. With now $3,000 on hand, Adam pays Barry his $1,100 and spends the rest of the money, confident that he can persuade someone else to give him the money before Christine's money is due to be repaid. The best Ponzi schemes, however, rely on long-term investors. If Adam can persuade Barry and Christine to let him to continue to invest their money, he'll need to pay them only periodic interest as he has promised. He can spend the rest confident that new investors will supply enough and the scheme will keep running. What is the difference between a Ponzi scheme and a pyramid scheme? Investors in a Ponzi scheme repays each other using investor money deposited by new investors, falsifying records of non-existent transactions to characterize the money as profit. When we look at falsifying transactions, right, go back and look at inflation. They say, oh, CPI is up 7% this year. Inflation data's come in. Who set that inflation data? Who owns the statistics behind that inflation data? Who's the one controlling? What is inflation based upon? Is it based on a house? Because going back 30, 40, 50 years ago, going back 50 years ago, I'll tell you what it was. It was based on your mortgage. It was based on meat, like a steak. It was based on certain things, right? It was based on how much it cost you to afford a car, right? Today, going back 10 years ago, it was based on your rent, right? Or your mortgage, right? Not the cost of the house, but the mortgage repayment that you're paying. It was based on mincemeat and sausage mince, right? It was based on your car repayments, right? Today, it's based on your rental ability for your housing component. It's based on Beyond Meats and those fake meats they 3D print for you. Do I need to explain any further, right? The CPI is a lie. There you go. Sounds like a little rant, right? A little slogan. A pyramid scheme is usually a promise of a lucrative business opportunity that requires initial investment. Each investment is rewarded for attracting new investors. The earliest participants ready to make a profit, earning money for every new recruit, and those that the new recruit signs up. Each new recruit makes less money than the previous one until no more new recruits can be found. Anyway, I digress. Right? So if we're looking at the Ponzi scheme out there, we now have a bit of an understanding about a Ponzi scheme. It's a scam, right? Let's look at debt. Let's look at the debt-based fiat Ponzi scheme that we exist in today. And I say that it's a debt-based Ponzi scheme, and it's because that the system and the mechanisms have changed. So 1913, Federal Reserve came in. 1933, they stopped trading gold. It was illegal. So they took all the gold, and then they instantly revalued. So they halved the value of the asset by being able to print so much more money, currency, and went from $20 to $35. It was illegal to hold gold for a period of 40 years until 1971. They went back and said, do whatever you want with gold, but everyone has to use the US dollar, and they did agreements in the background to force everyone to use the dollar. And if you look at inflation since 1970 and you look at the chart since 1970, things have really gone AWOL. Right? So I'm going to just go here and look at some little charts here. I'll share them with you on the screen, just with some paper here. But this first one here is Australia's M1 money supply here. And we'll put this one up on the screen so you can see the chart. In 1976, in February 1975, in Australia, in M1 money supply, we had $8 billion Aussie. And then we go through to the turn of the century and we've got $300 billion. So in the year 2000, roughly, we had maybe 2008. In 2000, we had probably $200 billion here. In the year 2008, before the GFC, we had about $300 billion. And then in 2016, we're at about $750 billion. And today we're at $1.6 trillion, right? If we look at it today, right, we'll just take all the zeros off, right? They say inflation's done this, inflation's done that. The baby boomer, right? You're stupid because you eat too much avocados on toast. You're eating out now, right? Whatever the case may be. You have to eat, right? Not only back in 1970 did the Australian household only have one parent, right? One parent worked and one parent stayed at home and looked after the kids, right? Today, you've got mum and dad in a Ponzi scheme that are forced to go and work, right? And you've got two sets of tax coming through from those people. So the government's doubled its income to put into the Ponzi scheme, right? Tax is really just the interest that we have to pay for the government debt that the government has, right? As a nation in 1992, the big recession we had to have back in 1992, it was $94 or $96 billion of debt the nation was in. Today, right, as a nation, we're in over $1 trillion of debt as a nation. Or apparently so great, right? So the question I ask is, did your house go up in value since 1970 when we only had $8 billion worth of debt in existence? When I say debt, the money is debt, right? The government go and get a bond, and when they go and get the bond, they borrowing the money and then they distribute it to the people, right? And then for the government to be able to hold that currency that's out there, they have to pay interest on that bond. That's why you've got a bond yield, because the yield is being paid on that. So as they're printing this money into circulation, right, we've now got let's say 1,600 billion, right? So let's take it off to $1,600, let's call it, right? $1,600 in 2020, but in 1975, it was only $8 billion, right? How many times has that expanded? When you overlay the amount of money or currency creation that's happened over the course of the last 50 years, from 1975 to 2024, 2025, and you overlay that with the cost of a house, the house has gone up 50 times as well. They've used the debt instrument to create this big Fiat Ponzi scheme illusion. And you've all been sold a lie, right? You used to be able to go and afford your car. You can't even afford a car anymore. You're going to get a car loan, right? And then your Ford Ute, right? A fucking Ute is selling for $100,000, right? My mate got a bargain the other day buying a Ford Ranger, a Raptor, right? $100,000 because the Amarok is $110,000, right? A V-dub, Ute, fucking trader Ute, $100,000, right? But who can afford that? Oh, you can't, so you have to get yourself into more debt. So this Ponzi scheme is entrapping everybody. Your mortgage has gone up, your food. Now that you go and buy clothes, Afterpay, right? Anyway, I digress. So first one there is the M1 money supply there. And then if we look at, do we have anything on the back of that? No. This one here, if we zoom in, 2003 we're at 214 billion. It's the same chart again. We look over onto the M3 money supply, which is this chart here, right? This is off Trading Economics. So in 1966, so for the 200 years in existence of the nation, right, it's 200 years. And I don't care if you look at the US debt, I'll pull up some US charts in a moment, Australia, it doesn't matter which country or nation around the world. In 1966, we had, so here we've got $3 trillion worth of M3 money supply today, right, in 2024. In 1966, up until 1971, throughout history, 200 years had passed as a nation, we didn't even get up to like $1 billion, $2 billion, $5 billion. Let's say it was $10 billion, right? It took 200 years. It was flat, right? And then suddenly, since they changed the rules in this system, we've gone to increase and print out currency to the level of $3 trillion via the M3 money supply, right? If that ain't a Ponzi scheme, I don't know what else is, right? Let's have a look at this chart here. This is just broken down. It's literally straight line. If you look at the cost of goods, look at the cost of everything, inflation is making a lifestyle really, really shit. And if you notice on the back of that, I've got here my charts, which is the bond yields. And the bond yields pretty much represent the interest rates that you have. So a 10-year bond is typically based on the back of a yield. So if we have a look, these two charts here, the 10-year bond versus the cash rate future. So hopefully you can see that, those that are watching, but I'll get my team to put it up on the screen. So I'm going to share with you guys the most interesting of all these charts, because these I've shown you Australian charts and all that. I'm going to share with you this one, which is from the Fred, and it shows $18 trillion. Yeah, 18 trillion. There's so many digits here. It's not funny, right? It's not funny. And it has been over $20 trillion. So this chart here, I'm going to get my editor to put this up on the screen so you can see this if you're watching it. If you're not watching this, just hear me out. We'll go for a little journey. So as we can see on this chart, the bottom line here isn't even, maybe $50, $100 billion up until about these grey lines that we see. There's some dark grey lines that are here that exist for like a period of 3 months, 6 months, 12 months, whatever, in between on the vertical. They are recessions that we've experienced over those periods of years. So up until about 1970, there would have been, I don't have the exact figure here, but it would be irrelevant, right? Maybe $50 billion, $100 billion worth of M1 currency in the system in America, right, in the US. Then between 1970, you can see that the line took its first leg up to around the early 1990s, where there was a big recession. There's a recession in the 80s and there's a recession in the 1990s. And every time you see one of those grey lines, it's a recession that hits, right? And after that recession, you start seeing massive uptick on this level of currency. And that continues until these recessions and the lines deviate and the horizontal moves up on a more vertical gradient. If we have a look here in 2020, and some say this is an accounting roundup and whatnot, we can see it just goes straight line from $4 trillion all the way up to $21 trillion. But if you notice at that point where it peaks out here on the chart at $21 trillion or $22 trillion here in about middle of 2021, it starts retreating back. From about 2021. What interesting things that occurred from that? Well, the first one is Corona occurred, so they just threw all this money and they printed everything. And after we saw this chart take off, right, we don't have access to all this data. They just manipulate the shit out of this stuff and they blame it on you guys. They're saying, oh, it's this person against that person, a war between these people, war between old people and young people, whatever the case may be. But we saw this shoot all the way up. But what else did we see shoot up at a vertical level at almost the same trajectory? We saw inflation. And everyone's like, oh, it's the Corona tax. The rusted out old Datsun car that used to cost $200 is now worth $50,000 suddenly. Everything went up in value. But then in 2021, we saw it deviate backwards. What happened at that period of time? That's when we started seeing reversal of monetary policy and the liquidity getting sucked out of the market. And since then, we've been seeing zombie companies out there. Every time you log on the news, you're either seeing a sports star die suddenly, or we're seeing a company go bust very suddenly. So, I look at all this and I think to myself, the world that we've been led to believe, right, we go to a government indoctrination camp, which only started, interestingly enough, when the central bank started in 1913. The education board came on around 1913 as well. Other things that occurred around then was the military industrial complex, as is all of, there's been people, they say that people never used to live as long as they do now and all these sorts of things, thanks to hail medical, whatever, right? But there's ancient Eastern cultures that are living a lot longer than us, right? And they're not full of cancers, obesity, diabetes, fatness, fucking, health tumors, strokes, heart attacks, like the Western world is, right? But, suddenly take this pill, take that pill, right? Have you ever noticed that when you go to a university and you go become a doctor, a lawyer, whatever, you can only play inside the box. The doctor can't tell you, hey, you're fat, right? You need to stop eating shit, right? Your doctor can't tell you, hey, your gut health is no good for you and it might be causing some of your mental health issues, right? The things start in your gut. I'm not here to profess to be a doctor or anything like that. I'm just saying that these institutions were all created at a very interesting point in history, and certain other things that occurred at those points in history as well. And if you deviate from the line, you speak out, you get a big, slap across the head. So we're not going to go too far into anything else because, we don't want to get shot or killed or censored or taken deplatformed or whatever the case may be here, folks. But when I look at Ponzi schemes, and I look at, is the property market here for the last 20 years as an investor, for 10 years of my life leading up to it, people talk about property. It's just a great Aussie pastime. Everyone thinks they can become wealthy from it. It does feel like a Ponzi scheme, right? But is it the property that's a Ponzi scheme, or is it the money, right? Did your property get any better? You've got a 3-bedroom red brick house. Did your property get any better? No, you're probably being forced into a lesser type of property for a lot more money. So is it the property got better and you have to pay more money for that? Or is it that they've printed too much currency out there and there's too much money, i.e. what your belief system of is money, floating around in the system, and you need more money to buy the same item, right? Because to me, that's what feels like a Ponzi scheme to me, is the currency that we use. So we touched on a few things, the things that I want to look into and, give you with some homework, some thought-provoking ideas. When we sit there, we look at other potential Ponzi schemes, stock market, right? It's just a paper market made up of all these things that are very complex. You have no idea what it's being invested into. Is that a Ponzi scheme? Your super fund, right? You're forced to put your money into a super. Don't ask. You're a dumbass. Don't ask questions. It's invested. The government's got your best interest at heart. You do what we tell you to do, and this is what you have to do, right? Your super's put into that. So is your super in a Ponzi scheme? Because the question I ask you is, you might be asking your super fund provider, what's it invested into? What are the shares? You're telling me I've got $100,000 in my super, or $200,000, $500,000. What is that physically invested into? What am I getting a return on there? What is it invested? Because let me tell you, when a shopping centre goes to build a new car park, they don't sit there and go to the bank and say, hey, can I get a 95% LVR based on X, Y, Z? They're going and saying, we're going to raise some capital, just like any other Ponzi scheme. And they go, okay, we're going to create a derivative, a bond, a different type of bond, and we'll call it a bond, call it a cash flow booster fund based on property, right? Do you own the property, or do you own a mortgage attached to the property that's given to some other management company that's there to manage the shopping centre that you've got some sort of interest into, which you don't own anything, right? So I like to question, what is the super invested into? Any paper financial market. If we look at the derivatives market, going back in the GFC, what caused that was about $7.5 to $8.5 trillion. $8.5 trillion worth of mortgages that were all just based on derivatives, right? We're not going to get into derivatives today. If you've seen The Big Short, the cat shit wrapped into the dog shit, right? The derivatives market, it just bets, right? They're going, hey, we won't invest in the actual physical of that, but what we'll do is we'll take a position to go, we'll take out an option, we'll take out a bet against this happening. If that doesn't happen, we'll hedge our funds doing whatever, right? There was $8 trillion that caused the GFC, which is one of the biggest financial crises probably the biggest financial crisis any of us have ever seen back in 2008. But then we look at that and we think, okay, what is the actual derivative market today? And there's no actual recording on that because it's all off balance sheet transactions, right? So the derivative markets is in the quadrillions today, quadrillions of dollars in the derivatives market, right? If we saw a financial crisis happen today, how big is that? When you look at the level of currency creation, doesn't matter which country we're looking at and which monetary supply we're looking at, whether you're looking at the M1 money supply here from the New York Fed, whether we look at the Australian M3 money supply here, whether we're looking at, where's the other one that I had? I'm losing him here. The M1 money supply here in Australia, they're all being washed away. They're all being devalued at a rapid rate. And that rate is not getting any better. It's getting more and more vertical. On that note, guys, I don't mean to be a negative motherfucker. I just want to share with you, I got asked, what's a Ponzi scheme? People hear these words being thrown around as a Ponzi scheme. I just thought I would get directly from the horse's mouth of Google and Investopedia as to what a Ponzi scheme is, and look at, some of the red flags that you should be looking at, and then be thinking around the world that you see, what's happening to my life? Why is these certain things happening? How can I protect myself? And how can I get a better understanding of how this whole financial system works? Because it's not how you're told on the news. Because the same people that tell you what to do and what to listen to, how to behave, how to act, and what you need to do to your body, are the same people from the TV channels that you're watching, from the news outlets, are the same owners, right? You need to do the research. You need to go to the deep dive down. And that's sort of why I put this No BS with Birchy podcast out there. So on that note, folks, if you need help trying to navigate through this system, you can reach out to us, 1300 367 925. Email us, admin@binvested.com.au. If you like our videos, share them with your friends and family. Make sure to subscribe, Google Play, Apple Play, Spotify, YouTube. Give us a thumbs up. Write some comments below. Let's get these messages out there. And take advantage. Like, no one's got a more vested interest in your well-being than yourself. We're living in a very crazy world. I've talked about this for the last 6-7 years when it comes to finances. No one else out there in the property space is talking about this. No one else out there is exposing it in the financial markets, not to the level that I'm talking about it, not the level of detail. And I make my decisions based on this data, because this is how the rich are getting richer, and the poor are getting poorer because they're drinking beer, spitting at the screen, going, yeah, that's my football team, yeah, that's this, right? If you go throughout history, the Roman Empire fell, with the gladiators, the Colosseum, and the wine and the bread they were being given then. So be careful. You can either be given the cheap thrills that the system's there designed to keep you trapped by, or you can do the research, take the hard decisions, and be able to take care of your own personal financial future and make your own decisions to live life on your terms. So if you need help, I'm going to leave it with you guys. We'll catch up next Thursday. Have a great week. Bye for now.
Like Bilal said, man, we stuck in the matrix. This my advice, don't care if you take it. The dollar back to die, soon to be hyperinflated.